Hey guys, this is Andrew for DIVERGENCES.com. So for those who are watching my videos for the first time, I'm working as a professional trader for the past 6 years in Hong Kong, and I decided to make some YouTube videos a few months ago to explain to you how to use technical analysis, to set up your trades, to understand the market price action development, and to actually make money on the markets. If you want to know about all this stuff, you guys are in the right place. So today I want to show you what I see when I apply all these techniques on the Dogecoin. Let's get into it. So I actually did my first video on the Dogecoin last week, or maybe I did one before. It would be interesting to see what I was saying, and I forgot. But I mean, what we're having since last week is definitely more interesting to analyze than what we had before. So here, I'm going to apply Elliott wave principle to this price action development. And I'm going to try to see if yes or not, the cycle is complete. If it's not complete, I'm going to use Fib extensions to find the price target. So it's something I've done already, but the situation has changed a bit. So I'm going to do it again with you guys and see the alternative scenarios and try to see where we might be heading. So when I do it since inception, you know, here I have a beautiful 1, 2, 3, 4, 5. This is complete. This is finished. Then here we have a correction, ABC. I don't know why it disappeared. Let me add it. Okay. ABC. Now we're having a 1, 2, I think 3, 4, 5. All right. So this is my view. And the 5, we were saying it's going to 0.9. You're going to see that the target has changed a little bit now, but it's still going to be bullish. Now, so let's focus on everything that actually happened since the 23rd of February. Okay. So let's zoom in. Okay, so my scenario, so let me get rid of that. That's why, okay, so we see the beginning, all right? So my scenario is that here we did a 1, then we corrected in an ABC that is kind of a flat correction. I just noticed something. I thought this was a zigzag, which would make this a flat, but actually this is a flat. So this is probably going to be a zigzag. That's one of the rules of Elliott wave principle. If second wave is a zigzag, fourth wave is a flat. And if second wave is a flat, then the fourth wave is a zigzag. And here I'm having a flat, so the most common situation is to having a zigzag here. So let me finish discounting. Discounting is good, guys, because it's fitting well, you know, that's the only thing you can use is your feeling. If yes or not, your counting is correct. And my feeling is telling me that it's correct because here when I break down this third wave in 1, 2, 3, 4, 5, so the yellow one, 1, 2, 3, 4, 5, then the third wave here is broken in 1, 2, 3, 4, 5. Again, respecting all the rules. The third wave is the most impulsive one, and there are always 5 waves. The third wave is never the shortest, and you know, this is fitting well. So this is my scenario, and let me just show you the alternative scenario because it's always good to keep this in mind. And then I'm going to come back to this preferred scenario. But first, why don't I do something like this? Okay, why? And then the move up would be down and we would be correcting and we would probably go much lower and certainly not doing new highs soon. So why this is not good? 2 reasons. Okay, first reason is that let's assume we are like this. Let's do this kind of reasoning, a reverse absurd reasoning. This is how we call it in mathematics. You suppose something is true and you're going to come to an absurd conclusion. And so that the only reason for that to be absurd is that your initial assessment was wrong. So let's suppose it's like this. And then we're going to try to break down here my third wave in 5 waves. So then it's 1, 2, it cannot be like this. It must be like this, all right? 3, 4, and 5. Okay, you follow me? I just broke down this third wave from 2 to 3 in blue into 5 waves. So now the only way I have to make it is 1, 2, 3 here for 5 because this wave is taken. So now I do it again with this third wave. And then it cannot be like this. This must be a 5. And you see, we're having something absurd. Where is the third wave? There is no more. Oh, here. Okay. All right. Is it respecting Elliott wave rules? I'm afraid it's not, guys. Okay. What is the shortest wave between here? So 12, 11. So the third wave is shorter than the first one. And 17. This is absurd, guys, because the third wave would be the shortest in this counting. So this counting is wrong. It cannot be true. It's not respecting the rules of Elliott wave principle. If you want to know about all these rules, guys, just click on the link in the description of this video and you're going to access my member zone where I put free trainings about Elliott wave theory, where I explain everything, guys. It's very easy to understand because I read the books many times. So you can see, guys, that this is not working. Okay. I tried. I did my best. And one more thing, okay, if this is true, then here we having a 1, 2, 3, 4, 5. All right. So this actually would be possible. 1, 2. This could be a 1, 2. It cannot be a 1, 2 if this level, the high I have here, if it was higher than the high I had here, this couldn't be a 1, 2. So for now, it could be a 1, 2 and maybe 3, 4, 5. That's possible. But the reason this is not good for me is that here I couldn't make my breakdown properly if I assume that. So my only reasonable assumption is to consider that we are like this, all right? And now here, this is fitting better. I like it. So, and I was telling you guys that I was seeing here a triangle correction, but now that I see that this is a flat, having a zigzag here makes actually sense. So we're not sure of anything yet, but this looks good. So right now, what we guys are looking for, we are looking for some more strengths in this market. So I'm going to give you a very easy technique to use is trend lines. Once again, guys, log scale. Don't forget log scale, not regular. If I'm on the regular scale, this looks like this, you know. How can you do technical analysis on something like this? You cannot, all right? So you use log scale, which makes the price action development in percentage and not in absolute value, and which is more easy to read and which makes more sense actually. And so here, what you guys want to see, what you're looking for is the breakout of this level, all right? So when we break out here, it's the right time to buy, okay? I like to buy when the price is going higher, when I have the bullish momentum with me. I don't like to buy when it's bearish. So of course, if you guys managed to buy here, all right, congrats, at the top of the third wave, and this is actually the bottom of the C wave. It was missing only a few cents, I mean, tens of cents, whatever. So if you guys managed to do it, well done. I'm not trending like this. I like to buy when I have the bullish momentum with me. And here I would have the bullish momentum with me once we break this trend line that's connecting this high, and this high. So it can happen anytime. It can be at 25. And once again, you don't buy the breakout. You can buy the breakout, but I don't do it. You wait for a retest and you buy this. If you have a breakout here, you then buy this level, which is usually lower, and you can find some support area in this here. And so it would be around 22 cents if we break out on Monday. And so the new target, I use the same technique, but just my low is lower. And I use fib extension. I measure the third wave, bam, bam. I apply it to the bottom of my fourth wave, and the 1.618 is the most common number, the most common ratio we're going to reach. So it's 0.79. So it decreased a bit, guys. It was 0.9, but we bottomed here lower. So it's lower as well. So let's call it 0.8. So I think we're going to go to 0.8 before correcting deeper. Now, that's it for me. I hope you guys enjoyed this video. And if you did, please don't forget to click on the sub, like, and bell button. So you're going to be the first to know when I upload anything new. And stay close to shore. I see you guys.